Hello? Is there anybody out there? Come on, everybody. Where are you? Mickey's here. It's time for Mickey in the Middle. Who is going to be first today on the big show? I know that somebody's out there. Come on, let's do this, people. Where's my phone? Where's my... Did I lose my phone? My phone's got all my notes on it. I'm gonna have to do this from memory. This is gonna suck. All right, let me see another way of doing it. Hey, everybody, do me a favor. Check in as soon as you get here. Hello, Don Ledger. Hello, Greg Myers, Sherry Clark, Don Ledger again. Steve Hayes down in Florida. I gotta do one thing before we get started here. I need to go find a conversation I had earlier today with somebody that I love. Some people might call her Cool Breeze. Oh, come on, Facebook. Come on, Messenger. There you go. Oh, no, it was a text message. All right, here we go, everybody. Hello. And welcome to the big show. My name is Mickey, and this is Mickey in the Middle. Tonight is not going to be as serious as last night, because last night they were trying to erase you. Now they're just trying to take your money. So, let's see. We got it. All right, let me start over. Hello, everybody. My name is Mickey. This is Mickey in the Middle, the quintessential show for middle Americans who love our country, as middle Americans should, who believe that our country is the greatest country on the face of the planet and the greatest idea that has ever been created for a society of like-minded people. Now, right now, we might not have a lot of like-minded people out there. We got people all over the place, but here's what the deal is. The core of our existence is middle America. Those concepts are codified in what I like to call the Constitution of the United States of America, in particular, the first 10 amendments to the Constitution, which are known as the Bill of Rights. And those Bill of Rights don't have anything to do with the President of the United States. They don't have anything to do with the Congress of the United States. They don't have anything to do with the judiciary of the United States. Those are your rights. If you don't know them, how are you supposed to defend them? So they go, hey man, let's write the Constitution all over again. Okay, I'm all for writing it all over again. But you better end up with the same stuff in the next Constitution as we have in this one. And then if you want to give me a few more rights, that would be cool with me too. So let's see who's here today. Oh, happy birthday again, Greg Meyer. Sherry, Lindsay Young, welcome to the show. Mark, how you doing? Mark Teskey out there. Darla Stewart, how are you? Oh, by the way, Darla, today's day one. Yeah. Hey, guess what I'm doing? I'm drinking coffee. Probably highly illegal, but guess what? It has less than 1 carbohydrate in there. They're doing a good job. Gas is up. So... I'm just going to point of personal privilege. Today, for the last couple of weeks, we've been noticing that gas is upwards of 210, 215, 220, 225. I've seen it as high as 225. Today, we were driving down Barksdale Boulevard, my dad and I, and we saw gas for $1.99. I got a car wash with the intention of going and getting some $1.99 gas while it was still below $2, but I forgot, and I drove down to my house and I said, oh, Dad, we're down to less than a quarter of a tank, so I got to get gas, and down the street, it was $2.16. So, being the frugal individual I was, I drove 1 mile back down the road to Walmart, and I got gas there for $1.99. No sense in spending 16 cents extra, because as a middle American, I've got to be careful with my money. Now, the funny thing is that this show tonight is about money. You guys might have heard about GameStop. I got to write that down. I'm going to forget who all of the players are in this. So there's GameStop, there's hedge funds, HEDG funds. And then there is the government. And the people that want to put you down, like the Security and Exchange Commission, and then Robin Hood and the other portals. So the reason I'm doing this is I had all of my notes on my telephone. And I don't know where my phone is. It is nowhere to be found. So, alrighty. So let's get right on this. Let's get on this. First of all, my daughter texted me this afternoon and said, "Hey, Dad, you seem to be kind of up on things. So what's the deal with what's going on with GameStop?" And I was like, "Baby, do you really want to know?" And she was like, "Yeah, Dad, I really want to know." And I was like, "Well, baby, the easiest way to put it is the little man is sticking it to the big man. And there's nothing the big man can do about it until the little man gets scared. And then when the little man gets scared, the big man is going to crush the little man, just like the little man deserves to be crushed by the Wall Street overlords." Now, I use the term overlords very, very precisely. See, we have the governmental overlords, and they are our overlords, as was evidenced last night by them erasing your voice and not doing anything in Congress that's of note, and letting Joe Biden and Donald Trump and President Obama and President Bush legislate through executive fiat. And I proved to you, I showed you the hundreds and hundreds of executive orders that they have implemented, all of them have, to rule your life, because Congress is a failure. I am so mad at them. I told you the other day that I am personally going to end Congress as we know it, and I can tell you right now, I took action to do that today, and I will continue to take action, and I will get that done. So just hang with me, and I'll fix Congress, but it's going to take me about 2 years to fix Congress. So the second thing is that because you are being erased, I started using the term the government overlord. So Overlord Pelosi, Overlord McConnell, Overlord Schumer, Overlord Biden, Overlord Trump. It doesn't matter. They're all overlords. They want to do what they want to do. And because their constituency keeps voting them in, nothing is ever going to change. Well, if you think about the way things operate on Wall Street, and with the big stockbrokers and all the big agencies that are up there, they do the same thing. We have our little bitty peon paychecks, and we take that little bitty peon paycheck and we put it in our 401ks, we put it in our retirement account, we put it in our Roth accounts, and then those companies take that money up to Wall Street where they invest in America. So if you have stocks and bonds, or you have a retirement account, a 401, or Roth, if you have insurance, if you have any of these industries, what they do is they take your money up to Wall Street, and then the brokers broker deals to invest your money into municipalities, into cities, into states, into bonds issued by the government, into corporations that are all over. So if you go up and you look at the Dow Jones Industrials, or you look at the NASDAQ stocks and bonds, or all the stocks that are up there, and then they have commodities markets, and you have a lot of places where brokers can take your money and invest it into the businesses, the cities, the states, and the municipalities of the United States of America. Other markets take that money, or other brokers take that money, and they can also invest it in commodities, things like rice, beans, pigs, chickens. Commodity is something that you buy that's going to be short term, and that is kind of like a really fluctuating market, because commodity is a actual thing. Now, when you take stocks are going into a business. And the whole idea behind that is that they wanted to have an exchange where you can take your money without going to a company and you could invest in the company so that you could support a company. And then when you supported that company and they had your money, they paid out what was called a dividend. Now, the dividend is based on the profit of the company and the people and is paid to the people that own the company. And if you own shares in the company, you are the owner of the company. They have what they call a majority shareholder. A majority shareholder, if they're over 51%, gets all of the say-so. Over 50%, 50.1%, has all the say-so of the company, because if you voted, if all of the shareholders voted, if you have 50.1% of the shares, that means that every single time you will get your way. Most businesses do, most people that are in stock and bonds, they don't own 50.1% of anything, but they do have large shares. That means that they're very influential in the way that these companies operate. But the whole idea was you can take your money, invest it in a business, and when they turn a profit, you would get what they called a dividend back. And then if you wanted to take your dividend and reinvest and buy more of the company, you could do that. But that's the whole idea behind the stock markets and where the stock markets came from. It just gave you the ability to invest in a company. Well, over the years, I have to say this. I'm not a stockbroker. I'm not in anything. I'm just a person who knows how the system works. Kind of. Nobody really knows how the whole system works. But I'm going to give you the basics. So now, what happened next is, instead of taking money and investing it into a corporation or into a company and having that company make a profit and give you back a dividend, people understood that, hey, companies' value and their stock values are not always equal to what the company is worth. That's a very, very key factor in this. People that are investing can invest below the level of the value of a company or above the value of the company. And what happens is, as these stock trades go back and forth, the companies are trying to have maintain a level of value. And this is very, very important. A company's trying to maintain a level of value by offering products and services to the community so that when they can turn a profit, it goes back. Now, how valuable that is what stockbrokers are betting. So, if a company is worth $100 million and their stock is $1 a piece, but you can get it for 90 cents, that means that you can make 10 cents on every share that you buy if you buy all of them. Because the value of the company is $1, but you're going to pay 90 cents a share. And other people will go, well, yeah, it's worth $1. I'll give you $1 for that because it's equal to the value of the company. People also go, hey, look here, the company has got lots of potential, so I'm willing to pay above what the market value is of the company so that when the company goes up and expands in their value, I will be right there with them. And then as it expands past what their value is on what I bought it in, then that will be a profit that I can have. And I'll also get the dividends along the way. Here's what the crazy thing is. That started becoming perverted. And when it became perverted when people started taking really, really, really large sums of money and betting them on companies, knowing whether their stock was going to go up or down. And then somebody came up with a stupid rule called selling short. This is where we are today. So there's a little bitty company out there called GameStop. GameStop is a gaming company. You can go into GameStop and they have all of the video games up there. You can either rent them, you can buy them, but you go into a store. It's kind of like Blockbuster. Remember how Blockbuster used to have the videos and the DVDs, and you would go to the store and you would get the DVDs and you would get the VHS tapes, or you would do whatever, and then you would take them home, you would watch it, and you would rent it, and you would bring it back to them. That's the way that GameStop works, only they work that way with computer games. The problem is with GameStop is all of that is online now. So you don't have to go to a store in order to get a program or go to a store in order to get a game. You just go to wherever the website is and you download it straight to your computer, meaning that GameStop, although it is a favorite store of many, many people, it makes it obsolete. And they have hundreds of GameStops all throughout the United States of America. But really, they're defunct, and they're going to go the way that Blockbuster did, because the technology of the delivery system is not efficient anymore. If I can stay at home and download, why in the hell would I want to go to GameStop? Unless I want to try new games. But even the computer companies online are giving people the ability to try games on a limited basis while you sit in your chair. So here's why it's important. First, let me explain what selling short means. Selling short means that you sell stocks that you do not own to people now, and then you pay for those stocks later. Let me get that straight in your head. You sell the stock for whatever the price is right now, and then you buy them later. The best way to explain this is, if you... All right, is this my notes on this? No, what did I do with my notes on it? All right, so the best way to explain this to you is when you buy a stock, the stock can either go up or the stock can go down. If it goes down, you're losing value. If it goes up, you're gaining value. But if you sell before you buy, now all of a sudden you're taking a chance on whether the stock is going to go up or buy. So somebody will go to a company and say, can I borrow X number of shares? And they borrow those shares. So now they have possession of 100,000 shares. And they sell them. So if you have 100,000 shares and you sell them, let's say that you have 1 million shares and you sell them for $100 a piece. Now all of a sudden you have just made $100 million. So you have 1 million shares that are worth $100 a piece, and now your shares, you just sold them for $100 million. But you have not paid for those yet. So what you do is you go in and you borrow, kind of like, hey, I'll pay you Tuesday for some stocks today. So they go in and they borrow a million shares of stock and they sell them. And now they owe the price of whatever that stock is going to be next Tuesday. So that's what a bunch of hedge fund managers did. They went out and they bought a whole bunch of stock in GameStop and they sold it. And then they said, oh, by the way, and they announced this to the world, we believe that this company is total crap, and so we are selling short, which means that we are betting that this company is going to tank. And as soon as the public hears that, the public goes, holy smoke, these big guys believe that this company is going to tank, and then they sell their stock, which drives the price of the stock down. And then when the company that said, hey, look here, I'm going to borrow these from you and I'm going to sell them up here, when the stock comes down here, I'll gladly pay you on Tuesday. And then I will make the difference because I sold $100 million worth, but I'm only going to pay you $50 million worth. And that's where selling short comes in. They borrow them and sell them, and then they pay you next week whatever they're worth. And that's what selling short means. So what happened is GameStop was going to go broke. They're on their way out the door. And a really, really rich guy said, hey, I'm going to take a whole bunch of money and I'm going to sell short GameStop stock. So that's hard to say 3 times differently. I hope you guys are following this. So they decided that they were going to sell it short. However, a group of individual investors that talk to each other on Reddit and other platforms and on Robinhood all got together and said, hey man, this guy's about to tank our favorite company. A bunch of people that love GameStop basically started texting each other and FaceTiming each other saying, hey man, they're going to tank the company. What happens if we drive the stock up rather than down? So you got to remember, the person in the hedge fund sold the stocks at this point, and if it goes down, he can sell that stock at this point and make the difference. But if the stock goes up, then when they come to pay, they have to pay this upper rate. So all of the people on Reddit and all the people on Robinhood and all that, they started buying stock. And all of a sudden, that started driving the price up. And it drove the price up over $300. And it drove the price up 800%. Now, all of a sudden, the bill came due for the stock. And instead of the stock being at $100, it was at, like, I mean, instead of a stock being like at $50, it was like $400. So whoever was selling short had to pay back the company $400 per share instead of what he expected, which was going to be $50 a share. So the rumor on the street is that he ended up paying $150 more than he paid for each stock that was out there. I hope that was the explanation. Now, the story gets even better. Although this story doesn't have any sex or violence or anything like this, it has monetary violence involved. Because all the little people that were on Robinhood and all of these little platforms that got on, the little day traders, the little people like me and you that buy stocks individually, then all of a sudden they started winning because when the price went up and up and up, they bought it from this dude at this price. The stock goes up. That was their profit. But eventually, in order to realize the profit from the business, you have to sell it. I want you to understand that. You might have the stock, but you're going to have to sell it eventually in order to make any money. Because if you buy it at 50 and you sell it at 50, then no, you don't make any money. So you buy it at 50, and as it goes up to 100, you sell it and you made $50 per share. I hope you're following this. So now everybody knew that the dude got caught in the shorts. He paid off that bill. A couple of other large hedge funds came in and infused money into that hedge fund. And then he rebought the stock, or he borrowed the stock to sell it short again. How about that? So he doubled down on the bet, hoping that all the little people would not do it again. And guess what they did? The little people of the Robinhoods of the world continued to buy the stock, so the price went up and up and up, and they were about to stick the guy again. But then, all of a sudden, the people that had the portals for Robinhood and the little bitty investors said, we don't like what we're doing. We don't like what you're doing. We think that you're colluding together to do this. And so what we're going to do is we're going to start an investigation and we're going to stop you from selling your stock. So everybody that could sell stock started selling stock because they didn't want to get stuck, and then the price plummeted. And now the dude that just doubled down on the hedge fund has the ability to now make his billions and billions of dollars back. So we're going to find out where this goes. We're going to find out where this goes. But this is a little bitty person getting the door slammed on him by the Wall Street overlords. Because if I buy and sell through a portal called Robinhood, and all of a sudden Robinhood says, I'm going to limit what you can buy, and I'm going to limit what you can do, and we're not going to even talk about GameStop anymore. You're not allowed to buy or sell that. And all of a sudden, people, as the price is plummeting, people are stuck with the stock at a high price. That means that all of those profits that they could have had if they had sold at a high price are now disappearing. That means that men and women in the middle class are just getting hammered. Hammered! So, hey, John Swinghammer's here. Hey, Swing, how you doing? Jeff Needing, get to the point. All right, so here's what the point is. The point is that because this, a whole bunch of different hedge funds, bet on America all the time. They invest all of these stocks. When one of these hedge funds loses value, that means that everybody that's out across America that has any money with a hedge fund is going to lose money. So when the stock market tanks like it did yesterday for like 600, 700 points, all of a sudden now everybody starts panicking, everybody starts selling, it drives the price down, and everybody in the country loses money. The problem is that when the money gets split, who is going to win and who's going to lose? Well, the only people that are going to win are going to be the people on Wall Street, because they're going to manipulate the markets in order to stay ahead of the game. And the people that are going to lose are all of the people that have 401ks, have retirement accounts, and have bought into all of these funds through their mutual funds and retirement accounts. This is the worst sticky wicket that could ever happen on Wall Street as far as the individual investor is involved. I do not use Robinhood, but I'm telling you what, those people should have fired a warning shot over the halls of Congress that said selling a stock short should be illegal. You are betting against a company, and if you have the ability to drive a price down, there's nothing that's going to be able to stop you if you infuse $1 billion into the equation. If you're going to sell short, you're going to have to say, hey, look here. You're betting against the company in order to destroy it, in order to drive the stock price down so that you can collect a profit and destroy a company. I believe that selling, because when I first started studying this stuff, I did not understand selling short. But you borrow, you sell, and then you buy. When you buy at a lower price than you sold it, you make a ton of profit. And that's how, when you buy a stock and it goes up, the way the rest of us understand the market, when you buy a stock here and it goes up, yay! When you buy a stock here and it goes down, boo! But when you can sell it here, and then the opposite happens. When it goes up, boo! Why would anybody want to boo when the stock market goes up or when the price goes up? Unless you're selling short. And then yay when the company is being destroyed. And that's what the difference is. So that's what I wanted to do today. So I wanted you to understand how selling short actually works. Because literally, it makes absolutely no sense to the common person out there. And the fact that GameStop is in the middle of this, and their stock skyrocketed, and it is dropping like a rock today. It fell more than 40% of the stock price that they had. They lost 40% of the value in the company in one day because everybody started manipulating the market. Everybody started infusing money. Everybody started selling. Everybody got caught by the short hairs. And the next thing you know, you had a company that was failing, but managing. Somebody bet against it. Other people bet for it. It went up, and now it's falling like a rock. Now, I don't know what tomorrow's going to bring. It's going to be the most interesting thing. But that's what I wanted to tell you. If you don't understand how the market works, how in the world can the average middle American take advantage of the opportunity of investing in America? Because investing in America is one of the greatest things that we can do. Because when we invest in a company, or when we invest in a stock portfolio, or when we have a mutual fund, or we buy commodities, or we buy bonds, those are supporting either a government, a city, a state, the federal government. They are supporting a store. If you go look on there are thousands of companies on the markets. Then you can go and buy and invest in all of them. They have small caps, they have mid caps, they have large caps, they have aggressive growth, they have moderate growth, they have conservative growth, they have blue chip stocks. It's absolutely fascinating. And if you go, you can go on the internet and you can learn all about it. But the problem is, and this is what the thing is, everything that you do when you give somebody else money is a gamble. I would like to repeat that. Everything you do when you give somebody else money is a gamble. If you give your neighbor $500 and your neighbor says, I will pay you back next Tuesday, Don't ever expect your neighbor to give you that money back, because if you do, you're going to be deeply disappointed because they needed to borrow $500, and why you would ever think that they could get it back to you? That's how banks work. Banks take the risk for us whenever they loan money to us. If you loan money to your neighbor, you're operating as a bank for them. You've got to make sure that they have the ability to pay back. With the stock market, you pay in first unless you are short, and then if you are selling short, you can sell here. If it drops down and hits your mark, you make a lot of money. But if the price goes up like the hedge fund managers did not expect, you get absolutely hammered. And that is how they lost $2 billion in a day. So that's all I got to say. So I was going to talk about a little bit more about being erased, but I'm up in my 30 minutes, so I got to go. So, sorry, Jeff. I apologize for not getting the point. Lane Calcaterra, Jeff Needing, thank you very much, Jeff. I appreciate it. I like doing this. Pretty soon, if we're not careful, we won't need to go anywhere for anything. That is true, because right now, I order my groceries online. I get everything from Amazon, and the only time I go out is to get absolute basics and emergency necessity stuff. 420. Oh, there's 420 for you right there. Good, Mickey. What apps will not block? What apps do you use? Okay, so I used to use E-Trade, but I don't know. So anybody that you broker through can block you. They can just defund or they can't defund your account, right? So they're only accountable for the amount of money that they have, and they have no obligation to make those trades for you. That's one of the things about when you use a straight up stockbroker, then they have an obligation to make those trades, buys, sells, and stops as you direct them to. If you go through a portal, once again, you get into a situation where they can restrict what you do, they can shut you off, because they are really kind of like just a porthole for you to go through. But if they shut your porthole, God, that sounds terrible. If they shut your porthole. So what I do now is I've got a company that I invest with, and that company takes very, very good care of me. But they could not take care of me or protect me yesterday, so I got shellacked. Just want to let you know, I got shellacked yesterday. And I didn't even know that it was going on because I wasn't watching TV, and I didn't know anything about it until today, when my daughter sent me the text message that said, "Hey, what's going on?" I researched it real quick, and I went, "Oh my gosh, selling shorty." So they'll block. They have the ability to block anything, and they don't have an obligation to do anything on the timeline that you want them to. So if I go in to a position on Friday night, it might not get done until Monday, if it even gets done then. Hope your money is still in jars and not in the market. Okay, so my daughter keeps telling me, "Daddy, you need to invest in mason jars. That's where I'm doing my money." Good for her. I made over 30% on CNS funds and TSP last year. Jeff, for the win. Yes, that is outstanding. So I did very well last year too. So it was good. But I also sold at the beginning of the pandemic, and then after everything crashed 12,000 points, I bought back in. So yeah, the name Robin Hood says it all, right? Steal from the rich, give to the poor. It's a poor man's way to go in there right until they side with the hedge fund managers, and then they restrict your account and they limit what you can do, what you can buy, and what you can sell. That is illegal, and everybody's going to start a class action lawsuit that was on Robinhood that had GameStop stock, and that company's going to get shellacked because a judge is not going to let them get away with that stuff. Right now, nothing to do for the time being. Just a question. Isn't it convenient this economic emergency comes up as Biden announced he's going to raise taxes on the middle classes? Well, right. Mark, this is not an economic emergency by any stretch of the imagination. This is not an economic emergency. And when I say that, we have the gross domestic product of the United States of America. I want to get my numbers right. The gross domestic product of the United States of America is somewhere right around $20 trillion a year is what we normally go through. So $20 trillion a year, a couple of $1 billion out of a hedge fund, It's going to make a slight dent in the market, but other than that, and the market came back 300 points. So the Dow Jones Industrial came back 300 points of the dump that happened yesterday. So, and then the NASDAQ was also up. So, if you're a market watcher, yes, you're gonna get these great big slides. But as long as you're not going to have a continuous slide like we had at the beginning of the pandemic, it's not really an emergency. Is he going to raise taxes on the middle classes? Right. So he said he's going to overturn everything that Trump did. And when he overturns everything that Trump did, well, Trump gave you a tax cut. And if you want to have your tax raised, well, you get rid of that. Because if you get rid of the cut, that is actually a raise. But they don't say that. So does the same go for the government? TSP advice, don't stay in G Fund. I'm not sure. I can't remember what G Fund is, but I'll believe it. I'm out of the market, all in G. I'm out of the market, all in G Fund. Oh, okay. So that's got to be bonds, right? So it's got to be the bond market. Share. Thank you. Thanks, Mickey. Hey, good night, everybody. I love you. Thanks a lot for taking your time, spending it with me. Remember, Mickey in the Middle, Monday through Friday, 9 p.m. Central, right here, wherever I am. You guys have a fantastic night. I love you very much, and I will see you later. Remember to live, laugh, and love. Peace. See ya. All right, where's the button?